Hey, welcome to Wolf. Happy Friday. We have made it to the end of the week. I am super stoked. I have brought Mark Moss to you. You guys know we love all the Bitcoin conversations. We love all the macro, the market talk conversations. And typically we have all sorts of panels that come on. Delighted to be joined by Mark Moss to go a lot deeper into the world of Bitcoin, into the TradFi side as well. I want to learn a ton today. So Mark, thank you so much for coming on.
Yeah, Kate, thanks so much. Always a pleasure to sit down and talk about Bitcoin and how it's taking over TradFi. So
yeah, man, absolutely. And so for people who are unaware, you're making a ton of Bitcoin content, ton of market content. People who want to, they can just type in your name on YouTube. They'll find so much stuff. First, my first thought is this: where we're at in the Bitcoin predicament amongst Wall Street people and the Bitcoiners. There's this big poll, right? We got the OGs who are the cypherpunk, and then we got the Wall Street guys who are coming in. And the hard part for me has been like, which of the Wall Street guys actually get Bitcoin? Because I can't tell if they're getting in because of the price or if they really understand Bitcoin as an asset. And my real question is, will it even matter? Because people are so nervous about MSTR. Are they going to be able to outrun all the the risks that they're taking on? Because if they do, they'll be the most profitable company, the biggest probably in the world. If they don't, it's going to be a big bloodbath. So I'd love to get some of your thoughts on where we're at in the market.
Yeah, I mean, so kind of to answer the first question, which was, of these Wall Street people that are sort of getting involved, like how many of them understand Bitcoin? There's a couple of ways that I think about this. So like, first of all, it doesn't really matter. And what I mean about that is that the way technology evolves is eventually to get the majority and the early majority and then finally the late majority. So there's what's called a diffusion of innovation. And it's the way that you measure any new technology, whether it's a telephone, a washing machine, a color TV, and how it gets to full adoption, which is typically about 80%. So we go through this diffusion of innovation. And so you have to get over the chasm and then you bring the early majority and late majority. And to get the majority in, they're the people that will use the technology without having to understand the technology. They're my kids that grew up using the internet where I had to like figure out how to get this modem and plug it into my computer and connect over a telephone line, right? So like now people just use it, like they just take it for granted that they can just see someone's face on their phone, right? And so when I say it doesn't matter, I mean that. Now, does it matter? Well, of course it does, because eventually we want everyone to keep the ethos of Bitcoin. But in the Bitcoin community, we sort of believe that people don't change Bitcoin, Bitcoin changes people. And so what happens is almost everybody's path that I've heard has been sort of the same as my path, which is you put a little bit of money into Bitcoin, you're curious, you get involved. And as the Bible says, well, where your treasure goes, there your heart goes, right? So all of a sudden you put a little bit of money there, you start paying attention to it. What is this thing that I put money into? Let me start watching some more videos. And very quickly you start realizing that it's not just like a get rich quick program or just some new trading asset or trading toy, but rather it's freedom money. It's a way that we can hold, we can store without censorship, without somebody debasing us. And so all of a sudden it gives us these options, and then it starts to change our mindset. So then we start going from like this fiat mindset, which we don't even realize that we're afflicted by, where it's very short-term thinking, right? Our money's losing value so fast. We constantly have to spend it. We make poor choices on how we invest it and how we spend it. And all of a sudden, once you have an asset, when you're able to store your wealth in an asset like Bitcoin that's building, it's gaining purchasing power over time, it starts to change the way you think about everything. So now it starts to change the way I think about spending. Do I really need this now? Or could I get this later? Should I invest into this? Does it beat Bitcoin's return? And then when you start thinking like that, then it starts changing everything. Like, well, what about my health? Am I making a short-term decision on what I'm eating today and sacrificing my long-term health? What about my relationships? Why am I treating my relationships like this? And so it starts to change your thinking. And so that's why we say Bitcoin changes you. So to answer the question, summarize it, I believe most of Wall Street comes into Bitcoin and doesn't really understand it. And I would say that for a couple of reasons. Number one, I've often said that you come for the NGU, for the number go up, but you stay for the freedom. So they come because they see this asset going up. They understand they have to have it in their portfolio. They're also busy. As you're well aware, Cade, it takes, I don't even know at what point you understand Bitcoin, but it takes tens of hours, it takes hundreds of hours, it takes thousands.
It took me way longer than I thought. It clicked for me, and I thought I got it, but it was just the same when I converted, which is, I love that you brought up the Bible. I converted to Christianity after a lifelong of nothing going on, like a year and a half ago. And I thought once it clicked, it would be ezy. And I was like, man, it's so easy. And then after about a year, I was like, you know what? This is actually way harder than I thought. I get why I need Christ here. And the same with, I love those points.
Yeah. And so, it takes 10 hours, and then it takes 100 hours, and then it takes 1,000 hours, and there's really no end of that. And so you just can't expect the average CEO, like Elon Musk. Why doesn't Elon Musk get it better? Like, come on, man. He's running like robots and satellite phones and like rocket ships that come back down and self-driving cars. And
he's starting to get it, though. I saw him. He posted a couple tweets recently, and I was
he's
like,
starting to get it. He's starting to get it, but it takes time to get those 1,000 hours. And so that's why the average Wall Street person, they come for the number, go up. Over time, they'll put the time in, and Bitcoin will change them, and eventually they'll get it.
Yeah. What are your thoughts on this? This is something that came up probably 2 months ago or so. We had a couple guys who were ex-Wall Street, 40 years plus on the floor, and they're pounding the floor on this. They're talking about paper Bitcoin. Everyone's lending, which is great. I prefer not to sell my Bitcoin. I've been stacking and stacking and stacking. I'm like, that's ideally my retirement bag. That's not something I prefer to trade. So in my head, at some point, lending has to happen in a way that's not going to screw me over. It's not going to be completely lended on top of lends and we get screwed up here. But what are your thoughts on the whole world of lending? We've got everyone entering the game, it feels like, but there's only 21 million coins this time. It worked before with fiat. Can it work with Bitcoin? I just want to get some of your thoughts on paper Bitcoin. Do we have more than 21 million? And I just want to get your thoughts on this.
Okay, so I would break those two subjects apart. So we can talk about paper Bitcoin and are there more than 21 million Bitcoin, but I don't know if that has anything to do with lending. So I think those are two separate conversations to have. So we can talk about the paper Bitcoin first, and then we'll jump into lending, which I think is a much bigger subject. So when I think about paper Bitcoin, we think about like paper gold, right? So you have physical gold, obviously. You can have it in your safe or whatever. If I have the gold, it's physical. I have the gold, and if I give it to you, you have the gold. But then we put it on a ledger. And so now how do we know that ledger only records the one physical ounce of gold that's really there, and they don't really give both of us credit for the same physical ounce? And so that's the problem with the ledger. That's why gold failed. And we know in the gold industry, we have all these gold ETFs, and we know that there's way more gold owned than there are actual gold units for that. Now, it's gotten so out of control that we don't actually know how over levered it is. It's rumored that there could be anywhere from 300 to 500 paper ounces for every one physical ounce. And this isn't just gold or Bitcoin. This is anything that uses a ledger. So there's a famous case of Dole, the pineapple company. It's a publicly traded company. And they went through some shareholder things. They were trying to change the organization of the company. And they found out that there was 30% more shares of Dole than had been issued. So when you start trusting people with the ledger, things get off. Yeah. So back to the question of paper Bitcoin. Once we start adding derivative products on top of Bitcoin, futures, which started in 2017. And then we start having exchanges. So we found out, like with FTX, for example, when FTX collapsed, they said they had billions of dollars of Bitcoin. And I believe they only had 2 when they collapsed. So there were paper Bitcoin at FTX, right? People thought they owned Bitcoin when they looked at their account. They owned it, but there was no Bitcoin there, right? Now, when you talk about lending kind of creates paper Bitcoin because of what's called rehypothecation, right? So the way rehypothecation works, just for everybody to follow along, is that I lend it to you, but you lend it to somebody else. And what happens is, let's just say that I have a candy bar. And I don't need the candy bar right now, but you're really hungry, so I give it to you. And you owe me a candy bar, right? So technically, on my balance sheet, I have one because you owe me one, and then you actually have one in your hand. But then you loan it to somebody else, and loan it to somebody else, and loan it to somebody else. So now, on paper, 5 of us say we own a candy bar, but in reality, there's only one candy bar. And when that 5th guy decides to eat it, 5 candy bars just disappeared out of thin air because one was taken out. Right. And so that's kind of what happened when FTX and Celsius and all of that collapsed, is all of that rehypothecated, which to your point is this paper Bitcoin that kind of got built up in the system, created this systemic risk. Now, it works both ways. So like obviously in that example, it created that risk where if something happens at one location, it takes everybody else down. But what it also does is it changes the supply demand metrics of Bitcoin, right? So economics 101, price moves on supply and demand. And so if I'm creating artificial supply, it doesn't move the demand properly. So that's sort of the problem with, well, there's a bunch of problems with it. And so, we don't really know. But right now, the amount of options that are happening on Bitcoin and the amount of derivatives that are happening on Bitcoin, and obviously now with the publicly traded companies and the rehypothecation, it's been somewhat cleaned up. I don't have an honest answer of how much that's actually affecting Bitcoin's price. Yeah, we can easily see, and you can just easily understand that I might have bought 1 Bitcoin, but now I'll use that same amount of money to buy a Bitcoin treasury company. But that Bitcoin treasury company might not buy 1 Bitcoin. They might buy half a Bitcoin. So now the one Bitcoin I would have taken off the market only got half a Bitcoin taken off the market, for example. So we do know it's impacting the market, but I haven't really seen any good metrics that actually give us that. So we can understand that there's danger there.
Yeah.
But let's go back to I can stop there if you want to talk about that.
No, please continue.
But then we go back to just like overall lending. Just last week, I was out in New York for the Bitcoin Treasuries Unconference.
Oh, you were there? Nice.
Hosted by Tim Kotzman. It was really cool. And I got to be on the stage with Michael Saylor, and we kind of talked about what the future of finance is with these Bitcoin Treasury companies. And I laid out what I call the Rails framework. So we talk about Bitcoin running on Bitcoin Rails, and I laid out the Rails framework. And I think about, a lot of Bitcoiners think that Bitcoin gets rid of financialization. Right. So our entire economy has been financialized. Every asset's been securitized and financialized. And we have this whole Wall Street complex that's been built up for mainly the only reason is that our money's broken. Mm-hmm. Right. And because our money is losing value so fast, we're forced to become investors. And so there's this entire Wall Street complex that's been built up around investors and financial advisors and ETFs and all these things, just so I have a place to put my money. So hopefully it can outpace inflation. So I think Bitcoin takes away most of that. So I think a lot of what Wall Street is there for, a lot of that scaffolding gets compressed. But there's a lot of it that will never go away. Bitcoin will still continue to run on these rails. And the rails, it's an acronym. So R is there's always going to be reserves and savings. So there's always going to be people there's creators and consumers. And there's creators that are going to create more than they consume, and they're going to save it. Now, of course, with Bitcoin, we can just put it into cold storage. We don't need anyone to help us save it, but that's not really how it's going to work. In a future state, at some point, we understand not only is there a scarce asset of only 21 million Bitcoin, but the block space is also limited. Yep. There is not enough block space for 8 billion people in the world to transact on the base layer. Not everybody will be able to transact on the base layer. So we're going to need institutions, financial institutions that can do custody, that have trusts and that can store it. And not only that, for an individual, not every individual can transact on the base layer, but what if I'm a corporation? What if I'm a public entity? I can't know the 12 words in my head for an entire corporation, for a trust, things like that. And so then for that, you need higher levels of security, multi-sig, things like that. Yeah. And so there's always going to be a need for savings and institutions around that. Okay, then there's A. So this is like allocations and credit. And so to the point that we just asked about credit never goes away. As a matter of fact, credit is the oldest form of money. Before money, there was credit. So like we're both in the same village and like, hey, you need a little bit of the wheat. Okay, here's a little bit of wheat. Get me back next year when your crops grow, right? So that's the oldest form of money. And so we're always going to need to have a need for credit. Entrepreneurs are always going to need funding to start businesses. Entrepreneurs are going to need money to scale businesses, right? Yeah. And savers are always going to look to deploy some of that savings to credit. That will never go away. Like I said, it was the oldest form of money. So that's the A. Then we have the I. Now, I stands for insurance and risk. And so one of the biggest pieces of a financial portfolio for everybody, including personal and institutions, is insurance, right? We don't want to have a catastrophic loss that we can't afford. And so we need insurance. So there's always going to be people that are going to want to offset that risk to somebody else. And there's always going to be somebody willing to underwrite that risk for a fee. So insurance doesn't go away. I think this maybe is one of the most exciting areas for like a Bitcoin treasury company to get into. If you can write risk properly, you can make a lot of money because you get the float, like Warren Buffett famously did with his insurance companies. You get the float, you can put that into Bitcoin. And then that Bitcoin grows in value. So then when you get paid out, you're getting paid out on money that's not being debased, that's holding its purchasing power. So insurance, financial products and institutions never go away. Then we have the L. And this one, a lot of Bitcoiners don't understand this either. This is the liquidity and payments. And so again, Bitcoin white paper, peer-to-peer electronic cash. So what do I need a financial institution? Why do I need an intermediary? I can just transact peer-to-peer. It says it right in the white paper. And you're absolutely right. You and I can transact right now, lightning fast, over lightning, no pun intended, peer-to-peer. And that's cool. But like, think about it like electricity. I can have a generator in my backyard, or I could just plug into the grid. Now, I have a house down in Mexico that's completely off grid. So there's no grid to plug into, and I have solar panels. And that's great. So individually, we can do it peer to peer. But like What about in New York City, where I just was last week? Those skyscrapers,
Right.
they can't get enough solar panels on there. What about factories? What about cities, right? And so what if I'm Walmart and I have 10,000 locations globally and I'm doing $680 billion of transactions a year? I'm going to do every single one of those one-to-one, peer-to-peer? Like, of course not. What if I have 100,000 employees I have to make payroll on? Every single one at a time, I'm going to pay peer-to-peer, right? So like, we're still going to need liquidity. We're still going to need payment providers. There will still always be a need for financial services around that. And then finally, the S. The S is securities and markets. There will always be a need for capital formation. So before equities, about 430 years ago, the equities were created, stocks, and that was created by the Dutch East India traders. But before that, people pooled capital for people to go sell to the New World and bring back riches. So rich people pooled money. Let's all go in and we'll divvy up what they bring back, right? And so there's always going to be a need for capital formation and for price discovery. That's never going to go away. And so there's always going to need to be markets. And so the financial institutions will be, some sort of exchanges and brokerages and things like that. So most of the Wall Street scaffolding goes away because we don't need to invest to keep ahead of inflation. But all of the financial services are always going to be there, but they'll be based on a Bitcoin standard instead of a fiat standard.
Wow. Okay. That especially, you're right. The liquidity one, I was like not ready for. That's a great point, because that's not something, especially in our Bitcoin conversation, that comes up as much, because it's almost too realistic, right? It's like throwing in the traditional finance wrench in the middle of our Bitcoin conversation. Yeah. But that's a great point, because you're talking about that. It's like it's always been around. Like there's always been credit. There's always been people who are willing to put something in for something in the future.
Yeah, and I think a lot of the Bitcoiners, they, maybe they haven't started big businesses, they haven't worked in corporate world, or they just don't really understand how the world works for whatever it may be, and they see that it's peer-to-peer electronic cash, and we don't need intermediaries, and we can store our own wealth, and we can transact peer-to-peer. And yes, you can do all those things, but that doesn't solve every problem in the world, right? Like I said, Walmart can't do that, and so you kind of have to think like, there's different levels to this game. There's different needs in the world. That's why we have markets. That's why we have a world. And so, obviously I see all that on a Bitcoin standard. And like I said, we don't need to be investing anymore because Bitcoin can just hold its purchasing power. But there's always going to be people still that save and look to invest. There's still
do you like the idea of the stable coins and the crypto rails that are coming in, or do you think they're unnecessary almost? Because a lot of people thought Bitcoin was going to be that thing that comes in and changes Wall Street. It ended up being stable coins.
Yeah. Well, I think they're absolutely necessary, because you have to look at things as a process and not an event. So it's not like Bitcoin's here, that's it, change the world, right? It's like there's a process that things have to go through. And so as of right now today, Bitcoin is too volatile to be used for short-term money, right? So if you're trying to plan out the next couple of weeks or next couple of months, Bitcoin is just too volatile for that, right? So for example, we hit 122 or whatever it was, and today we're at, 110 or 112. But it's like, if I had to pay my rent right now, that could be catastrophic for me, right? And especially when you think about, 50% of the world lives on less than $5 a day. 75% of the world, and this is where a lot of Bitcoin plebs don't understand this either, 75% of the world lives on less than $10 a day. 75% of the world. So they can't just go buy Bitcoin and hodl for 5 years. Like, it's no, like I need money every day. And so that volatility is pretty dangerous, right? So you want to think about your money and the time frame that you need to use that money. So if I am good to park my money for a couple of years, and I tell people, hey, take all the money you can afford not to spend for the next 4 years and put it into Bitcoin. But if you need the money in 6 months, I probably wouldn't put it into Bitcoin. It's too dangerous. I don't know what the price of Bitcoin will be in 6 months, right? So the stable coins are really good for that right now. So it's an intermediary, right? It's an intermediary step. Now, eventually Bitcoin gets big enough and the volatility continues to go down over time. And so eventually Bitcoin, there's no need for stable coins eventually. But it's a nice step right now. And it's good for a number of reasons. Number one, it gets the world used to, it normalizes, it standardizes like this digital asset. So there's still a lot of people who think this Bitcoin stuff is like this scam, digital, paper, whatever, magic internet money kind of a thing, right? And so when the US dollar is now on there and you have, GSIB banks pushing it, it sort of standardizes it, normalizes it, it pushes people across the chasm, and they'll start using dollar stablecoins. And then all of a sudden they're going to have stable coins and they're going, well, I wonder why these dollar stable coins keep buying me less and less, but this Bitcoin thing over here keeps buying me more and more. Why don't I use that? So it's like a real quick jump, right? It's like a gateway drug almost, right? It's a real quick jump from there. So I think it's a necessary step. It's an important step. We need it today. And I think it ushers more people into Bitcoin in the long run.
That's a way interesting take, actually. I've not heard it put that way. I've seen a couple comments in here talking about, I think one person agreed here talking about stablecoins as being an on-ramp to eventually to Bitcoin. I think that's similar to what you're talking about. Volatility doesn't really affect people's purchases day to day in sats. I guess you could be storing your money in USDC or something and pay in sats. That's your.
How could you say that? I mean,
I'm not sure.
The volatility doesn't affect people making purchases day to day in sats. Sats are a unit of Bitcoin, right? So like, it's a fraction of Bitcoin, right? So it's like, well, if I pay with pennies, it doesn't matter if I pay with like, of course, right? So
Chad,
it's like,
if you could open up, what do you mean by that? Maybe we were misreading it, but yeah, I don't think that makes sense either.
Yeah, because like I said, the price of Bitcoin just last month was 120, and today it's 109.
Yeah,
and whether that's a sat or a full Bitcoin, it still is the same devaluation or drop in value in that same period.
Well, I'm curious. Before you came to Bitcoin, were you into the gold and silver? Were you like, this is the move? Were you early to that, or how did you think about these scarce assets versus fiat?
Yeah, that's a great question. I think it's actually a very important question. So I often say a lot of times that people don't understand Bitcoin, and you see well-known prominent people saying Bitcoin has no value. There's no use case for Bitcoin. I don't understand why we need Bitcoin. And the reason why they don't see the value or they don't understand why we need Bitcoin is because they're not aware of the problems, right? They're like, what do you mean? Like they're in New York drinking a $20 Mai Tai and they're like, what do you mean? The dollar works great. Yeah, but do you know what's going on in North Korea where you're not even allowed to have money? Do you know in Afghanistan, women can't even have bank accounts? Like, who are you in New York drinking a $20, cocktail saying that the money's fine? It's not for women in Afghanistan. Okay. So they don't understand the problems that the world has. Right. And so I say that because my path was, I had in the 2000s, I started a couple internet high tech businesses, an internet business, a high tech medical equipment business, very successful, had some big exits, Fortune 500 exits. And I started doing some venture capital, put a bunch of money into real estate. 2008 came, kind of got wiped out. And I was like, what just happened? Like, I just made all this money. I was really good at it. But like, what's this financial system? I'm not even paying attention to this. So I need to go figure that out. So I'm going to go learn what's going on. So then I started studying, the Fed and monetary policy. I quickly found out about fiat currency and like, they just print unlimited money. And then I learned about the leverage that built up in the banking system. And once I was like, that's the problem. It's fiat is the problem. The unlimited debasement, the leverage, that's the problem. Well, then what's the solution? At the time, it was gold. So I became a gold bug. But I say that because I had to first understand what the problem was. And once I've understood the problem, then I could go find a solution to the problem. Now, at the time, the solution was gold. So to your question, I became a gold bug. What I've realized now is I'm not a gold bug. I was just a sound money advocate.
Yep.
Right. And so then when I really dug into Bitcoin, the first time I, like anybody, I heard about it years before I bought it. But when it finally clicked for me, it was around 2015. And that's when I first bought it. And it was like, I was actually at the point where I had hired an attorney in Panama, and I was working on setting up a trust in Panama to move money out of the banking system. I was still afraid there was another banking collapse coming. And I was moving money out of the banking system in the US to Panama, and I was going to get this residency thing. And I took another look at Bitcoin. I said, wait, this is solving the same problem. What I'm trying to do is get money out of the banking system. And Bitcoin is a way to get money out of the banking system. So because I understood the problem and I knew what problem I was trying to solve for myself, Bitcoin became abundantly clear to me, right? And so I think for most people, like sometimes if I don't have the energy to argue with people on X or Twitter, I'll just, they'll say, well, I still don't understand why Bitcoin has a use case or whatever. And I'll say, it's probably because you don't understand money. So just start there. Yeah. Right? Go figure it out.
I agree. And that's honestly the deconstruction way is how I came to religion as well. I was like, I went backwards almost. I said, hold on, there's a bunch of really messed up stuff happening. I'd seen a couple movies where I had just seen pure evil depicted. And there were just like these big documentary style movies that came out a few years ago, blew my mind wide open I was like, oh, wait, that's what was that? That was not human. And I had to, I was like, okay, what does that mean? Like what happens when you have that kind of question in your head? And you go down the rabbit hole and you find you're like all these conversations around ethics and morals. And then eventually you go down the rabbit hole. It's the same with Bitcoin for me. I was trying to figure out why billionaires kept taking irrational amounts of money and throwing it into Bitcoin. I remember thinking in my head, why would you not pick Solana? Like pick Ethereum. Like, do you not want to make money? And I just had no idea. The conversation was not around what's going to make me money this cycle. It was what is going to outlast inflation and outlast these other currencies. And that's when I was like, it went off like a light bulb. I was like, wait a minute, there's Bitcoin and gold, and then there's crypto over here, which is fine. They can keep doing their thing, but I don't understand why there's animosity between the two. We just need to separate a little bit, because the Bitcoin conversation for a lot of the people who are here to, you know, make that a retirement bag, they're not concerned with the DeFi as much, because they're just there to hold like a hard asset like you're talking about. But it's tough because you got both sides of the conversation, and both people want to work in Bitcoin. You got a Bitcoin DeFi people over here. You have BitFi people, and then you have the folks who are just saying, don't touch it. We got Bitcoin. Don't touch anything. Don't decide anything. We just want to hold this thing. How do you think about all this?
I think there's a big misunderstanding there. And in order to make sense of things, typically you want to break them down sort of, you know, in like a first principles level. So we kind of want to break things down to their core basic elements so we can understand them better. And when that happens, then we can formulate our own ideas off that. So let me explain what I mean by that in this question. In the last like week or so, I've seen Kevin O'Leary, Mr. Wonderful, all over, you know, whatever social media. And his thing is like, I love Bitcoin and Ethereum, but the problem with Bitcoin is there's no yield. Like Ethereum has yield, and with Bitcoin, there's no yield. I'm going to fix it, right? Oh, don't worry, it's great, but I'm going to fix it. So I saw some post a day or two ago. I saved it. I haven't gone back to watch it yet, but he fixed it. So he figured out a way for Bitcoin to generate yield. Now, obviously, you can loan your Bitcoin out. We talked about that already. I could loan it out and get paid a yield. I think he's talking about creating like an option strategy on top of it, and then you can create yield with an option strategy. I believe BlackRock just announced that they filed for an income Bitcoin ETF, right, where they'll trade options against it, right? So you can use the Bitcoin to generate yield, but I think people misunderstand that. So if we think about it from a first principles level, and we think about income differently. So if I buy Ethereum and it pays me, I don't know, staking it pays me 3 or 4%. Is that income? I mean, like it's giving me like a yield off of it, right? Right. It's coming from inflation, by the way. But if I buy a $100,000 rental property and it gives me $300 a month, is that income? Yeah, right. It's income, right? I put 100,000 down, it's giving me 300. That's income. Okay. If I bought a $100,000 property and then a year later I sold it for $200,000, is that income? Sure. That's income too, right? So we would kind of like expand our mind a little bit about this, right? Okay, what if I bought a $100,000 property in 5 years, sold it for $1 million? Is that income? Yeah. I mean, capital appreciation, but I guess it's income over a different period of time. But yeah, I guess it's income too. Okay, so Bitcoin is averaging, you know, whatever, 50 to 60% CAGR over the last 5 years, depending on 3 years, really, depending on what angle or what time frame you want to look at it. Maybe 80% over the last like 5-6 years. So let's just call it 50%. Okay, that's 50% compounded annual growth rate. Now, how do I get yield from that? Well, just like the house example, I could buy it for 100,000, sell it 200,000. That's income, right? But what if the yield was the compounded annual growth rate? And what if I was able to just harvest a little bit of the appreciation off of Bitcoin using debt? Is that income? So I have an entire book written about this. I have a couple of videos on my website. I'm sorry, on YouTube if you want to go check them out.
What's the book titled?
How to retire tax-free off of Bitcoin. It's called the 5-year retirement plan. And so we can just use debt leverage to harvest the appreciation off of Bitcoin without selling the Bitcoin and still having the asset. So for example, if Bitcoin is going up at 50% a year, call it 30% a year, whatever number you want, I could borrow 10% against that asset every year in perpetuity. Now, why I would want to borrow against it as opposed to selling 10% of the asset is because it's compounding. I want to keep the asset. If I sell some off, the rate of compounding goes down, obviously, number one. Number two, I have to pay taxes. So what I do is I borrow 10% against the asset, which I'm harvesting the appreciation, and then I roll the debt each year, and the asset is compounding at 30 to 50%, but the debt's only growing at 10. So what I have is the asset growing much faster than the debt is. And so that's also income. That's also yield. I don't have to sell the Bitcoin to achieve it. I don't have to trade options. I don't have to loan it back out. I don't have to do any of those things. and I can still have yield coming from Bitcoin. And unlike, as I said, with Ethereum or Solana or whatever, that they pay yield from staking. Yeah, they're paying you yield from staking from inflation. So they're debasing you, and they're giving you a little bit of the amount that they're debasing you against. It's like the government prints $27 trillion, or what was it in like 2020, right? They printed however many trillions of dollars of stimmy and gave everybody like $1,000. Right?
I know, that's honestly
We're going to
insane.
debase you 40%, but don't worry, we'll give you $1,000 for it. Right?
That is insane that happened.
Yeah, and that's kind of how Solana and Ethereum are. But with Bitcoin, I can just harvest that, and I can have yield as well. And I think we just have to kind of look at that a little bit differently.
Yeah, no, I love that. And I saw a great question here from Narisu, actually asking about Litecoin. This is actually a topic that came up the other day in a market talk space, because someone asked, they said, will there be potentially a proof of work specific like bull run on these altcoins? There's Caspa, there's Litecoin, there's a few of these that have kind of popped up in these Bitcoin circles. And typically the Bitcoiners meet it with the whole, you're not Bitcoin, you copy this answer. But then there's a lot of people who are like, hey, wait a second, but it's the same concept as Bitcoin, so how can you hate on it? Litecoin is just a limited supply, it was fairly dropped, blah, 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 blah. And so there's a few others that are similar. Do you think that's a possible narrative that could run just on the sole concept of like, sound money and just hard supply, things like that?
Yeah, no, that Bitcoin, that whole narrative is dead. And let me explain why. So what happens with technology is about every 50 years, we have a technological revolution. I call them a quantum wave cycle. And we can trace these cycles back 300 years. So for the last 300 years, about every 50 years, we have this quantum leap forward of technology. And it's not one technology, but it's a cluster of technology that comes together that moves the world forward. And so now we've had this cycle repeat 6 times. When a cycle repeats that many times, then it's most likely to repeat again. And they have a very dependable blueprint or framework that they follow. There's 4 distinct phases. I talked earlier about how every technology follows this diffusion of innovation, right? So there's a bell curve of diffusion of innovation. There's also an S curve that measures adoption. And there's 4 phases of this. And what happens is in these 4 phases, it's always the same. So what happened with Bitcoin, just like what happened in 1971 was the last cycle, which was microprocessors, 1908 was automobiles, et cetera, is that you get what's called the eruption. There's the new creation, and all of a sudden it creates this excitement, and everyone's playing with it, and what is it? And they're trying to experiment around with it, and the technology hasn't grown enough, and so there's scaling issues, there's speed issues, and so let's try something a little bit different this way. Let's try something faster. Let's try something more private. Let's try something with smart contracts. Let's try right? And in the beginning, we're experimenting, right? But as we move from phase 1 into phase 2, so that was like a retail driven, that was like the nerds, the programmers, the enthusiasts. And as we go into phase 2, we have now sort of a clear-cut winner. The technology has grown enough, and 2 problems are solved: speed and scaling. Now, once that's solved, and then phase 2 is then when it's called the institutional frenzy phase. That's when the big money comes in. So now we just talked about Wall Street, treasury companies. They can't invest into anonymous led white papers that get rug pulled. And they also want to deploy $1 billion. You can't deploy $1 billion into SUI or whatever, right? So they want to go into Bitcoin. That you asked earlier, why are all the billionaires buying Bitcoin? That's why. I need a legit company. I need it to be, big enough, liquid enough. If you remember when Elon Musk, Tesla had bought a bunch of Bitcoin and then he sold off a bunch. He's like, I just want to test the liquidity, right? So it needs to be liquid. And so in phase 1, sure, Litecoin made sense and Ethereum made sense and all the other, now there's, I think, 19.5 million cryptocurrencies on CoinMarketCap. But in phase 2, we've found out that we don't need those anymore. So back to even this example right here, Litecoin as silver to Bitcoin gold. So that was like the narrative back in like 2016. Bitcoin is too slow. There's only a transaction every 10 minutes. So it's like gold, and silver is smaller, faster, and cheaper. So they can complement each other like silver and gold used to complement each other. But what happened is, as soon as money, if we talk about gold and silver, that was base layer money. As soon as we got layer 2, which was the gold went in the bank, and the bank gave us paper, gold certificates. That was layer 2. As soon as we got that, there was no need for silver anymore.
Oh, man. Wow.
And now Bitcoin has layer 2, right? Wow. So now we can transact Bitcoin faster, cheaper, and more private than any other cryptocurrency out there on layer 2 or on layer 3. So all the coins that were faster, cheaper, more private, smart contracts are all irrelevant now, because all that can be done on layer 2 and layer 3
Wow.
today.
So what is your thoughts on people like Tom Lee jumping in saying Ethereum is going to be it? Wall Street has chosen this vehicle. I'm all in on Ethereum. Do you think that it's just Bitcoin only then? Or do you think they play out? Like, what are your personal thoughts on this? And maybe also your kind of objective thoughts on the market that you might see playing out too?
Yeah, I think over what period of time, right? So we have to kind of
True.
quantify things. And so obviously he's made billions of dollars doing that. So what does success look like, right? I've been working with a handful of treasury companies. I'm working one with Satsuma right now. We're just getting through the regulatory process in the UK.
Awesome.
And there's a lot of questions that we get all the time. Is there going to be only a couple winners? And I'm like, well, what's your definition of winning? Like, we just raised enough money to get over 2,000 Bitcoin, and 5 years from now, we'll be a $2 billion company.
Wow.
That's kind of winning. That's kind of winning. Now, that's not going to be MicroStrategy. They got 600,000 plus Bitcoin. No one's ever going to beat them. But like, I don't know, $2 billion company valuation is pretty good to me. So I think it depends on your what winning means. And so like Tom Lee made billions of dollars. Like, congratulations, right? But I do think it's kind of weird. So now we've seen it was Bitcoin treasury. So crypto has always sort of been like this affinity scam off of Bitcoin. It's kind of like Bitcoin, but better. And then we have Bitcoin treasury companies. So now we have DATs, digital asset treasury companies, right? And so now there's Solana ones and there's Ethereum ones, right? But I think it's kind of weird for a couple of reasons. So like, number one, Bitcoin is a commodity, right? So there's no central issuer. Anybody anywhere in the world can mine it and get it. No matter where you get it or mine it, it's fungible, right? There's no one that controls anything, right? Whereas all the other tokens are like securities, right? So they're like a private company, right? So like you have Ethereum and all the other ones, they have consensus. So that means that whoever has the most tokens and stakes the most tokens gets the most votes. But who has the most tokens and the most votes? Well, the insiders pre-mine 70% of the tokens, right? So Vitalik Buterin and Joseph Lubin and Consensus, they've changed the monetary supply, like I think at least 3 times in the last 4 years. So today they say it's even more scarce and harder than Bitcoin. Yeah, today, but you just changed it. So like, how many times can you change it, right? So it seems like, and I'm not saying there's no place for that. Maybe there will be, but they're more like securities, right? There was a central issuer. There's a group of people that affect it. There's a vote, just like stocks, have shareholders that vote, and they change things, right? And so I just think it's weird. Like, you can build a treasury off of a commodity. So you would see companies building gold reserves or oil reserves or Bitcoin reserves, but to put another company on your books, you don't see them doing, Apple reserves or, something like that. So, I don't know. We'll see what happens. I think that we know that I talked about the ledger. So we know that databases and ledgers are important. They've been around for hundreds of years, about 500 years, right? And Apple's one, and Amazon's one, and Facebook is one. They're just ledgers. And so we know that there's centralized ledgers. So we've seen, what happens when Amazon or YouTube wants to take you down off the ledger, click you off. And so then we understand that those are problems, and the solution is to have a decentralized ledger that nobody can control. So we know there's a use case for that as well, right? But I don't know, is there a long-term use case for a decentralized-ish? It's like, we still kind of control it, but it's kind of decentralized. So it's like, it's slow and inefficient because it's a little bit decentralized, but yet it's not really decentralized and secure because we control it. So like, I don't know if there's a need for that. We'll find out. I think it's going to be interesting to see if there's a sustained buy. So Tom Lee crushed it, as I said. Congratulations, hats off to him. But you don't see like the whole market rushing in to sustain that buy. Whereas Bitcoin, there's that sustained bid, right? We've seen twice in the last like month and a half, like $8 billion and $9 billion dumped in the market in one day, and the market just absorb it. So we'll see. It's hard to say. I think over a long enough period of time, as I said earlier, right, I think most of the capabilities that you can do on any other crypto chain can be done on top of Bitcoin. And I think eventually it converges to one algorithm.
Yeah. I'd love to get, so like you said, you've been in the market for a long time. I'd love to get, like, what is your spidey sense on the government regulation right now? It almost doesn't make any sense on any level. They're putting out numbers. The numbers don't make sense. We're at all-time highs of stock markets. Everyone is kind of like, this doesn't make any sense. They don't like the way Jerome looks. They keep passing pro crypto regulation. They're making it easier for crypto companies to come in. I guess, what is your thoughts on we saw Bo Hines jump into the White House. He comes in as, supposed to be heading out the digital assets and crypto stuff. And then a few months later, he ends up leaving, joins Tether. He starts heading out the USAT, new stablecoin. And it seems to be like a kind of get in there, figure out what's going on, then bring it out to private and sort of thing. And so I'm curious, I guess, on how good you feel or how bad you feel about the current administration, because now we've got what we want. No Gary Gensler. We've got off to the races. Everyone's building companies and stuff. Is that a good thing? Where is your head at with all this?
Well, I mean, I think certainly it's a good thing, right? So we've seen Bitcoin get to where it's at today in spite of all the political headwinds that it's been up against, right? So Operation Choke Point, Operation Choke Point 2.0. A lot of people, if they haven't been around long enough, don't really understand this. But in 2017, Bitcoin ran from $1,000 to $20,000 by December of 2017. Incredible. But what happens is, back to first principles, markets stop going up when there's no more buyers. Markets stop going down when there's no more sellers, right? So what happens is you start hitting this parabolic run and everyone's like, oh my gosh, getting rich and buying Bitcoin. I want to buy Bitcoin. So humans move, we react to pleasure and pain. So pleasure, I want to get rich too. I'll buy. It sells off. Oh, pain, sell. So it's sucking in more people. Pleasure. I want to get rich. Sucking in more people. And a lot of people don't realize this, but in December of 2017, when we had that epic crash, the blow off top, if you will, it was a coordinated takedown. Simultaneously, at the same time, all the banks shut off the ability to send money to crypto exchanges. All the credit card companies shut off the ability to buy crypto off your credit cards. Facebook shut off the ability to even run ads or talk about Bitcoin. Google shut off it. Like Google, Facebook, bank, everything gone.
Wow.
And again, right? Markets stop going on, but there's no more buyers. So if nobody can hear about it on Facebook and Google, no one can get money into it from their banks and credit cards, what do you think happens? So a lot of people don't really understand the political headwinds that Bitcoin has been up against over its entire existence. And so, then we had Operation Choke Point 2.0. Of course, we know, people now are more familiar with like Elizabeth Warren. She literally ran on a campaign of an anti-crypto. That was literally what her campaign was. Yeah. And Gary Gensler, of course, with all the stuff that he did. And then the Choke Point 2.0 was still blocking people. So, for example, I'm a partner in a venture fund, the Bitcoin Opportunity Fund, and we have the name Bitcoin in our name. And when we raise money, investors tried to wire us money, and a lot of banks wouldn't even allow them to wire money to us because it said Bitcoin in the name. And that was just over the last couple of years. Wow. So there's been enormous headwinds, and those headwinds have all of a sudden now gone from a headwind holding a beach ball underwater to now supportive and a tailwind blowing Bitcoin forward. And so if we think about this, I mean, just a couple things to kind of add on to this is like, I mean, the entire presidential administration. So Howard Lutnick, who is the Secretary of Commerce for the Trump administration, previous to Trump winning the election and Lutnick becoming part of the administration, Lutnick is head of Cantor Fitzgerald, which is a old school heavy hitter Wall Street fund. Mm-hmm. And he announced that they were opening up a $2 billion credit line for Bitcoin liquidity. Then they took major interest in both MicroStrategy and Tether. So his companies that he owns did that. Then he became part of the Trump administration. As part of the Trump administration, he's working on both the Sovereign Wealth Fund and the Strategic Bitcoin Reserve. Then you have Trump, who's the president. Was it like a month and a half ago or so? His company, DJT Media, which he owns more than 50% of, bought like $2.5 billion worth of Bitcoin. Yeah, both of his sons have taken interest, advisor roles, ownership roles in multiple Bitcoin companies. And we're talking about Trump, who made billions in real estate, whose sons would make or control billions in real estate, but now it's all billions in Bitcoin. Now, I would imagine that they probably know a couple things about where the political winds are going to blow Bitcoin in the near future for the rest of the term, I would imagine. So I think it's pretty amazing. I think it's important. Obviously, it's not the same everywhere. So we just saw, I think it was just today in the UK, they're saying that everybody has to have a digital ID now.
Saw that.
At the same time. Yeah, at the same time, they're rolling out the EU's rushing out their CBDC at the same time. So the CBDC has to connect to be the digital ID. Yeah, so certainly one part of the world's going one way. The free world, luckily, the United States is going the other. And I think it's super important. Yeah.
Man, yeah, I saw that the other day and I was like, this is not happening, right? Like, what? Well, I don't know how that would happen here, but or I mean, it's happening in the UK, but I don't know if that could happen here. I'm curious on this, get your thoughts on this. You mentioned it earlier, but with something like your faith or something like the Bible, which I think is a wealth of knowledge, regardless of if you think it's true or not. I think it's got great lessons in there. I'm curious if there's anything in the Bible that you've kind of have kind of impacted the way you look at finances or the way you kind of carry yourself as a man, or, you know, I don't know how you think about it, but is there any place where you notice it makes a big impact for you?
Certainly, as you said, right? Like whether you want to believe it's true or not, that's a conversation we can have. But I think most people would find it hard to argue that a lot of the principles are very useful and helpful in society. I think I spent you know, in my early 20s, I spent a lot of years, maybe I spent a decade in like personal development stuff, like devouring every book on like how to be better and how to set goals and how to manage time and all these different things. And what I found is that like I use a saying all the time here with my team, and I say principles are few, methods are many. So there's really only a few core principles of success in life, but there's a million ways to apply those core principles. And what I found after like a decade of personal development is I found like almost every core principle of success came from the Bible.
Wow.
And so I think that's pretty important. I think you could easily look at the 10 Commandments, and it would be pretty hard to argue that if society would just follow "Thou shalt not kill and steal and covet and cheat on your wife," and like, I think the world, you know, honor your parents, I think the world would probably be better. But you know, from the financial side, from the money side, I think there's also a lot of lessons in there, right? So for example, there's a lot of teachings and parables about our talents. And this is something I feel very strongly about, and I've talked quite vocally about, right? Is that I believe that we all should be trying to develop ourselves to be the best versions that we can be, not for ourselves, but for the world, right? I should be building my skills, and I should be learning more skills so I can serve and solve bigger problems for the world. I did a show with Peter McCormick. I've done several shows, but I did one with them years ago, and I said something that kind of triggered him, and it went kind of viral. But I was just talking about how I think that if you just live your life for minimum wage and just go work at McDonald's every day and go to your mother's basement and watch Netflix and Cheetos, I think that's selfish. Because you're not working to make yourself better or the world better, right? And I think that I think there's a big lesson in there. Obviously, Jesus was a servant, right? And so all business owners are servants. And like, you know, the poor people, the communists, the Marxists want to say that billionaires are greedy and they got there from theft and stealing. But business owners are servants. All we do is make money by serving the needs of other people. I think that's important. Another area that I think is pretty important is that, you know, in Proverbs, it talks about the importance a wise man leaves an inheritance for his children. And in the Bitcoin community and just across culture today, we see where like it's bad to leave money for your kids. I don't want to leave my kids any money. I don't want to ruin my kids, all these different things. But even in the Bitcoin space, we see this, right? But obviously the Bible says otherwise. And so I think a lot about legacy. And I think about it I think about it like Bitcoin, right? So like Bitcoin is proof of work. And proof of work is creating the blockchain, right? So I'm here on Earth for, you know, whatever, 70, 80, hopefully 100 years. And I should leave some sort of proof of work of my life that I was here. And why wouldn't I want the next generation to start at the next layer higher than me? So I'll finish one block of my life and let my next generation add the next block, and the next generation add the next block. And why shouldn't the world be moving forward like a blockchain of life, with each of us contributing with the proof of our work, rather than living selfishly and dying with zero? So I think it's anti-biblical. Yeah, I mean, there's a whole bunch we can keep going into, but I think those are a couple core ones for sure.
That was very powerful. The one that comes to mind for me was specifically with Jesus, was just the ridiculous amount of just him being able to just bite his tongue. I just am blown away at the level he's able to, because in our industry, I have not noticed that amongst even the most respected, the guys who made the most money, they're not able to bite their tongue if they disagree. And I noticed that it's not a problem. Maybe it's a debate, maybe it's for the sake of conversation even. But for myself, I noticed, I was like, man, my ability to just shut up sometimes, I think could be a really big help if I can just get myself to not think everything I say is important. But maybe there's something to learn in every single scenario. I was blown away at that. That was probably one of the biggest things for me. But man, I love that second point, especially. I love both of the points you brought up, but the second one was, I mean, that was a baller. I see Bits of Wealth even commented here, who comes in a lot of our spaces. He says Solomon CEO is a great business and personal development course back in the day by Mark Hoverson. I don't know anything about that, but he said it was all based in Proverbs. So that's fascinating.
It's funny. I smiled when you said that, because this morning I was reading in the book of James, and the whole part of the book of James is that your tongue has the power to bring life and burn your house down at the same time. And so it's like, how can you control your tongue? And that's exactly what you said. Like, how can you control your tongue? Right. The power to bring life and burn your house down is pretty amazing. I was just looking real quick. I have, if somebody likes this topic, I have a video on my channel called 12 Money Hacks from the 2,000-Year-Old Financial Book you've never heard of. And so it's a bunch of lessons I had pulled out of the Bible that pertain to money. And I think, so like what fiat money has done to us is it makes us, well, there's a lot of things it's done to us. I talked about some earlier, but like it's got us all thinking that we should go to school, get a grade, save for retirement, and work for 40 years. And hopefully one day we'll have enough money so we can do nothing and lay around all day and live until we run out of money. But the Bible tells us that work is a virtue. Work is a virtue. We should want to work. Now, there's a difference of obviously working on things you hate, that's a non-starter, and working on things you want to do. I think that's important. It talks about wealth being actually a divine gift for us. I think also the 10 Commandments shows that private property rights are given by God, right? So in the Communist Manifesto Karl Marx wrote, he said, to summarize communism in one statement is the abolition of private property. But the 10 Commandments says, thou shalt not steal. How can you steal something unless it's owned by somebody else? Wow. It talks about striving for excellence, right? So there's a lot of things about training yourself like a fighter, running the great race. Like I said, using your talents. A lot of stuff about budgeting and financial discipline. A lot of stories about actually investing for growth. Yeah. Anyway, I can keep going on, but there's a lot of stuff there. And then ultimately, the one that I love is generosity as the goal. Generosity as the goal. And so it's not about us, not about accumulation. It's like, what are we doing with it? And that kind of goes back to the selfish thing. It's like, if you're not doing anything with the talents that you've been given, and you're not doing anything with the time that you've been put on earth here for to help other people, like that's selfish. But also, if I made a bunch of money and didn't use any of it to help other people, that'd also be selfish as well.
I fully agree with that for one specific reason. One of the main reasons from a young age I wanted to make it in some capacity was I'd met a few older gentlemen. I think a couple of them were in their 40s and a couple of them were like 60s, 70s. And they were basically the ideal gentleman. Like, it's like Aragorn from Lord of the Rings. You're like, yeah, I want to be more like you. You have every quality I want, and someone who made it, but is not a POS. You know, you're a good guy or you're a good person. And I remember, because if those people hadn't gone out of their way specifically to somehow, I was able to pick up that they were wealthy somehow. I don't know how I knew, but I knew they were wealthy. But also, like, they made like an intentional effort to make sure that I remember, because I was a server, and there was like a couple of moments where they said something extra to me, or they made a moment to be extra nice or whatever it was. And I remember, because I was like, wow, I want to be more like you. And it's the only way that we can even out the balance when we have influencers who are just famous for every wrong reason, taking all their followers the wrong direction. The only way we can do that is by people stepping up and saying, hey, look, this is not that sexy, and it's not going to get a lot of views even. It might not even like be worth anything, but I'm going to just say this because I know it's true. I know it's right. And in 2025, that's like so important. There's no courage. I mean, when there is courage, we got a situation like Charlie Kirk from a couple weeks ago, and it's just, it's absolutely mind blowing.
Yeah. I think, I talk a lot about cycles, and one of the things with cycles is that, as much as things change, they stay the same. And that's because human nature typically takes things too far. So then you correct too far the other way, and then you sort of keep swinging back and forth like a pendulum. And so I think certainly, to those points that you've made, I think we've certainly seen that. And I think the pendulum has swung too far, and I think it's swinging back the other way.
It does seem like it.
And I think, a couple of years ago under the Biden administration, it was about being tolerant and about biting your tongue. And I think today it's about having a backbone and having a line and being a man and having values, right? Having core values. And I think it's swinging back that way. At least I'm hopeful.
Yeah, definitely. Mark, listen, this has been an excellent conversation. I probably could talk to you for another few hours. I want to make sure before we wrap that if there's anything you have coming up, you mentioned you have a book, and but you've got like a million resources online. So I know there's like a ton of stuff that people just type in your name. But is there anything specific that you guys have, offer, or do something in the ecosystem that maybe people don't know as much about, that you're like, hey, this is something cool that, I don't know, maybe doesn't get as much love as it should?
I mean, there's a lot of stuff, as you said, right? Just search Mark Moss, you'll find all kinds of things. I would say probably the one thing I'd bring attention to that I just want everybody to be aware of is I think that Bitcoin is the cheat code. I think that we can just buy Bitcoin. Well, factually, we can just buy Bitcoin and we can outperform all of Wall Street and every hedge fund and every VC fund and all VC fund. All we have to do is buy Bitcoin. And because of that, it gives us new unique opportunities, like I said, to harvest debt and roll assets. And so I have some videos that I've talked about how to retire tax-free off of Bitcoin. I have it, the 5-year retirement plan. So you can just find those videos on my YouTube channel. I think they're well worth your time. If you go to my website, onemarkmoss.com, I actually have a book that you can download completely for free, how to retire tax-free off of Bitcoin. And then in that, there's a calculator that you can actually calculate your retirement out of that.
Oh, wow.
There's a lot of people that don't really understand that. And they're like, well, how do I roll the debt? And how do I make the payment? And that kind of gets complicated. So I worked with Arch Lending to build what I think is
them as well.
I think is the very best lending product out there. And when I say best, it's not the cheapest, but it's the safest, in my opinion. Don't lose your Bitcoin. And we built it as a product. It's called Perpetual Income. There's no extra fee for it. And they'll just, how much income do you need? Put up this Bitcoin and we'll just roll it and give you the income. So archlending.com/velocity. So watch the videos, get the book. I'll teach you how to do it. Get the calculator. It's all free. If you want help doing it, archlending.com/velocity. I think we'll do that. I do just want to address just one comment here that I see 312 Mara put up here. And it says, it's okay to be wealthy. What's unfortunate is not wanting opportunity for others within reason. And I'm not exactly sure what that means, but what I'm thinking from that there, 312, is that I think some people misunderstand this a little bit, right? We're not wanting opportunity for others. First of all, usually the critics are the people who have never done anything. The successful people are always rooting for you. And the reason why successful people are always rooting for you is because they understand that status is a zero-sum game. In order for me to get higher, you have to get lower. But wealth is not a zero-sum game. The more wealth that's created, the more wealth there is for everybody. Let me give you an example. When Jeff Bezos became one of the richest guys in the world because he created Amazon, by him creating Amazon, it created a platform that today millions of people have become millionaires on by being able to sell products. Think of all the manufacturers that make the products that's sold on Amazon. Think of all the wealth that's been created because Amazon Marketplace is there. And so he got wealthy, but everyone else got wealthy as well. And so to that point, I don't think I haven't heard of any other wealthy people that would not want the same for other people. Real recognizes real, right? Players want to see everybody make it. And so I think a lot of times we have these, Tony Robbins would call them chains of false belief. We have what I just believe we have false assumptions that hold us back. And I just love to challenge that for everybody. We don't need to live within these constraints and these assumptions. Challenge that, break that open. That's not actually how the world works. The critic who's never built anything, he's the one that's going to talk down on you, but no one that's ever been successful will. So anyway, I'll leave it with that.
Dude, that is fantastic. Listen, for everyone who's watching back at home, Mark Moss, check him out on everywhere, and definitely check out Satsuma and be sure you get that, like some kind of notification on for that as that's coming out. And by the way, you can give him a follow if you're on X, which is the mainstream. Go right above our face. You can give him a follow. Highly recommend it. And if you're on YouTube, just down below in the description. Was there anything actually, Mark, or before you leave off, on anything on Satsuma that we should know about?
Yeah, I mean, Satsuma is a new treasury company launching in the UK. We hope to be the biggest and the best treasury company in the UK. We are still going through the regulatory process. We were hoping we were going to get out of it here at the end of the month. It's looking like it's going to drag out a couple of more months. So there's not really, unfortunately, not a whole lot to announce right there. We were way oversubscribed. There's a lot of demand. There's a lot of wonderful things that are there. But unfortunately, we're sort of sitting on our hands for maybe a couple of more months while we're going there. But definitely, like you said, add it to your watch list. Keep an eye out for it.
Amazing. Well, listen, guys, if you're back at home, appreciate everyone for listening in. Please repost the stream. If you enjoyed it, subscribe. If you're on YouTube, check out Mark Moss on all platforms. And we'll see you guys all in the next one. Take care, everybody.